Well, good afternoon, everyone. It's about 10 past 3 here, and it's Wednesday, the 9th of November. So the American session going, 40 minutes? As you can see, the S&P 500 down 17 points. It was down 30 a few minutes ago. All of the measures of the trend, longer-term measures of the trend, should I say, on VectorVest US are down. We've got a confirmed down in place. And as you can see, the short-term trend has just turned to up today. So VectorVest advocates caution when buying stocks at this time. I think that's warranted, especially in an environment where we have the US CPI number coming tomorrow. And clearly there's a great deal of politics in the air as well. So let's just have a quick look at the chart, and the chart doesn't look that great to me. If I put up a 6-month chart, we can see that how this market is sold off. I put on the longest term measure of the trend. VectorVest has been advising customers to stay well clear of this market since the 26th of August. That would have saved you a heap of cash. This market has fallen hard. To me, I think that all you really need to know about Elliott waves is the difference between impulsive waves and corrective waves. And to me, this is a clearly impulse wave down, and this is a corrective wave up. Now we are moving up here in what technicians would refer to as a rising wedge, which is a bearish formation. And on Saturday afternoon, I did a webcast for Mr. Stan Heller, who runs VectorVest Canada, and I expected this market to move up towards the top of that little trend line from the low, and it's gone up now for 3 days. I had some nice intraday trades yesterday in it. I would expect it not to do much today. Famous last words, I know, ahead of the CPI number. I think that a breakdown through this lower trend line, folks, would start quite a strong move down, certainly down to test the lows of a few weeks ago. So you need to be very careful in here. Clearly, if the inflation number comes in significantly less than anybody expected, then that would give the bulls maybe a bit of air at their back. But this pattern at the moment looking quite bearish. We have a look at the S&P 500, which I do my best to try and trade for a living. As you can see, I've had these lines on for a long time now. This market moved up. Is that a rising wedge? Is that a flag? I'm not quite sure, but certainly this is an impulse wave down, and that looks like a corrective wave up. I wouldn't be at all surprised to see this market move up, but certainly down below these levels here and down below, it hasn't been able to get through yesterday's low. I think a lot of people will short it below yesterday's low. If I was a betting man, and clearly you can't trade the S&P 500 without being somewhat of a betting man, I think we'll probably end up with an inside day today. And if it broke out of the inside day tomorrow, that should give us a clear idea of which way this is moving. We have a look at the short-term picture over on a 5-minute chart. Yesterday was the day that traders dream about, because it opened here at 9:30, and I put on the old 21 bar moving average. Let's make it a decent color that you can see. And it opened here, came back to the 21. Maybe that would have been a good entry, but I bought it just as it broke up through that. There was a little inside bar situation there. Stop loss was right there, and it just kept on trucking, and I got stopped out underneath that low. Clearly, the best trade of the day was the short, and that was to do with Chinese slowdown or something. But by that time, I was fed up and took my little bit here. It was a great trading day. All you had to do was take some fairly simple signals. As you can see, we're trading within the range of yesterday. That was yesterday's high. That was yesterday's low. We're trading within that range. And I think there's a good chance we're going to get a day of chop today. Famous last words. We're only 40 minutes into the blessed day. A breakdown through these lows, that low of yesterday, cause a lot of people to actually short this market. So the technical picture, ladies and gentlemen, looking bearish. The technical picture looking bearish. Clearly, a inflation number that's well below what was expected could kick that technical picture into touch. However, I shall be, in fact, looking and trying to bet on the short side today. I have got some bets running. I got stopped out of one yesterday. Shockwave lived up to its name. It got me out, but the XLE is going well. I think I need to bank that. So, I'm pleased with the GDX. I've held on to that GDX through thick and thin, and gold and silver have finally performed. If we chart these little fellas, that's the GDX. Sorry, that's the XLE, and I'm in that from just here, the fourth, wherever that is. Let's go. It's just a textbook triangle breakout. Where was the fourth now? Yeah, just there, somewhere in that bar. Went up, came back and kissed. They always do that, and then it broke up. See these lovely inside bars, folks? If you had bought there with the stop loss under the low, you would have now made 2 or 3 times more than what you risked. Inside bars are great with the trend to initiate low risk positions. Clearly, we've got an old top up here, and that's where the market stopped. Enough people, in fact, put the money in their pocket up there. I'm still in this as long as it stays above that 21-day moving average. It's on a buy recommendation, but I need to pull my stop up significantly. So let's have a look at, that's the GDX. I took this based on a weekly chart, and a weekly chart, we pulled back to this 78% retracement, and it spent a couple of months being accumulated down there. Yesterday it finally moved, and that is now well into the money. I'm hoping for a big move there. We shall see. And this is Shockwave, and it certainly, as I said earlier, it's lived up to its name, and it's starting to look much better now. It went right down here and ran pretty much every stop in town. My stop was underneath that trend line, and it's now moving up again, and maybe I'll have to re-enter that at some stage. If I put on earnings per share, we can see the earnings per share of this company over the last 6 months. Forecast earnings per share has gone from 140 to 320, and it's always a good sign to see professionals running stop losses like this. You know, that's a good old-fashioned accumulation by insiders. Unfortunately, I got hoofed out along the way. As you can see, there would have been a heap of stops under that 244 level, and those fellas are all now gone. I got out up there with a small loss. Remember, ladies and gentlemen, there's only 4 things that can happen to any one trade. 1 is a big win. 2 is a small win. 3 is a small loss, and 4 is a whopping big loss. And your objective is to avoid big losses. So I made a small loss on that, 0.5 to 1% of my spread betting account. So I just move on to the next one. Big losses have to be avoided at all costs, and I shall have no problems whatsoever in buying back into that. It looks really, really good to me. The technology is unproven, but certainly the metrics on VectorVest look great, but unfortunately, it just simply didn't work. So that said, let's go back to the front page of VectorVest, and we can see the S&P sitting 15 points. I think the intraday picture shows it better than anything, sitting inside this range. I haven't done anything today as yet. We shall see. So, folks, looks bearish to me. All the measures of the trend on VectorVest are down. All the long-term measures of the trend on VectorVest are down. And I think that you should be very cautious until that changes. I hope that helped. Thanks very much. Bye-bye.